What is up, everybody? Happy Friday, and welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what's going on in the space. And hope everyone's having a good week. Didn't get caught up in that bear trap. And was it a bear trap? Because, yeah, prices down for Bitcoin. We're at $68,470. So yesterday, we had some bullish news. When we look at the week chart, like we were rising, we were going up since last week when we were at like the 63 low, we pumped up to 66, and then we had a 68,000 rise all the way up to 73. People were thinking, is this the bull run? Is it happening? I was hesitant about it. It's like I almost want to go, is it? But I just had that feeling like we just need to be calm for the month of March, and I believe April. Well, I don't believe. I hope. I'm thinking like April is going to be our time to be green again for a couple months. But again, like in this time of March, I'm hoping, or I'm expecting we get to that 200-week moving average, because this was always like my turning point. We never touched it. So we still have 2 more days. This is from Monday's chart, because it goes by the week. It goes on the weekly average right now. So yeah, I'm expecting us to hit here, which is like 60,000. I was expecting like 60. So I don't know, maybe we're on our way down to that level before we do a turnaround, because again, I was thinking like maybe the bull run just got pushed back a year. That's what I thought, or the 4-year cycle is still continuing on. We're going to find out, but we thought it was going to be like in the halfway mark, or at least after Q1 of 2026. So we're just going to keep seeing what happens, what takes place. If we do get a nice little run up in April, then we'll see how long that lasts. I will expect another dip down, but some people are thinking because of institutional adoption, like we're just going to keep going at this point. But again, yeah, like with banks, just with everything going on right now, it's like when you have like institutional banks like getting on board, that price of Bitcoin can move fast and get gobbled up really quickly. So just don't get left behind if you're trading, like going from a stable coin back into Bitcoin. Like just always keep that in mind, that there could be a moment where Bitcoin just skyrockets and you would end up with less if you just kept holding on. But yeah, so that's what's going on with the price right now. Let's go over the news. Again, my title is "The IRS is after our taxes again." I will get to that article because they're trying to mandate an electronic delivery tax form with exchanges out there. But let's go over some Twitter news first before we get to the news, which kind of correlates to the price. So first up, which I thought was pretty cool news, is Square launches an automated bounties to onboard new Bitcoin merchants. Users can earn $25 in Bitcoin for making the first ever Bitcoin payment to a Square seller who has not previously accepted Bitcoin using Cash App. Do it 10 times and earn up to $250 in Satoshis. Now, merchants pay 0 processing fees, and the program runs until April 5th. So it's going to be a nice little initiative for this month going. So yeah, if you notice a shop that is using Square payments, ask them, hey, do you accept Bitcoin? And if they go no, you can go, actually, you do, because Jack Dorsey, creator of Square and Block Inc., he's allowing merchants to be able to do this seamlessly. So yeah, get them onboarded, get $25 per on board, because you will be that first transaction to slowly spread the adoption around the world in your community. Go, hey, I see you're using Square. Did you know you can accept Bitcoin payments? And they might not have no idea about it. They're just going through their day-to-day lives. So yeah, if you see a merchant using Square, just ask if they're accepting Bitcoin yet. So yeah, I thought that was pretty cool news. And then also Venezuela, the potential next leader, proposed something massive: sell their oil for Bitcoin and build a giant Bitcoin reserve. This will make them one of the richest nations on earth. First El Salvador, now Venezuela. Bitcoin's arms race has begun, and like this could be huge. Actually, didn't like oil prices just hit $99 a barrel today or something? So this could be a quick transfer of wealth. Like right now we see Venezuela, they were hurting, the leadership was terrible, their currency literally diminished, and they had like paper dollars. It's like roaming the streets because they had no value. This could like really how some of these small countries who like we think is like done for could make a comeback and collecting a Bitcoin reserve, because they still got oil. They can utilize that asset they have and start accepting a scarcer asset that, yeah, there's only 21 million of it. So yeah, so this would be a cool idea if, what's her name again? Yes, this interview with Maria Corina Machado, Venezuela's leading opposition figure and often called the next leader, proposed using Bitcoin as trade reserve. So with 300 barrels of oil, experts show that this could yield $100 billion in Bitcoin, shielding the wealth from the inflation echoes in El Salvador. So I think that would be pretty cool if they do that. That is a very smart idea. So let's see if she does become the leader and she does make it happen. So we'll keep you informed. And let's see. Oh, yeah. So now in the news as well, we have a fourth Bitcoin block found using rented hash rate. I feel like I covered this news like 3 times this week because, again, somebody keeps renting hash power, putting it towards a solo miner, and ends up winning within those lucky hours that they have the space rented for. But a nice hash easy mining user just spent about $70 in renting hash rate on a successful mined Bitcoin block, which was block height 939,527, earning the full reward of the 3.0989 Bitcoin worth about $219,912. It marks the fourth known block found with rented hash rate since December. Now, in December, another nice hash user mined a block after renting about $86 of power. In the past 3 weeks, 2 Brains users who also found blocks by renting $200 or less of hash power. People around the world have gone extremely lucky renting hash rate recently, and only in Bitcoin. And again, it's still lucky because like you're increasing your chances by renting the hash power, but we are still pretty strong. Bitcoin's still showing all-time like hash rate. We may have had some dips, miners allocating to AI, but the Bitcoin network is still very strong. But hey, by just renting hash power for a couple of hours, like usually I believe like when they're renting $70, they get 4 hours of hash power, which could be in petahashes. So they're getting quite a bit of energy for 4 hours of runtime. So for those 4 hours, it's like a higher odds of the lottery. It's still a lottery that they're going to solve that next block on the Bitcoin blockchain, but this increases their odds for it. So who knows? Maybe they're timing like the low points to hashing power. See, because when the hashing's low, there's less miners out there. But when there's more miners, the hashing increases. So let's just, maybe there are people out there are timing like when we're experiencing low hash rate, going over to either the 2 companies right now are Nice Hash and Brains, where you can rent hash power off of, and they just like choose that time. They throw the lottery, they spent $80 and boom, somebody wins. But this is the 4th time this happened. I should really try to give that a try. I know I have a little Bidax solo miner here. I should try this out. Keep an eye on the hash rate, see when we have a little low, and then just spend $80 to get like 4 hours of extra hash. So this is still happening right now. It just shows how the Bitcoin is like a lottery still if you're just mining out there. But while you're mining, you're also keeping the network secure. So keep that in mind. Now, what else do I have in the Twitter news before I go into the IRS news is breaking. Saylor just confirmed his intention for his Bitcoin keys, and they are to be destroyed when he passes away, describing it as a pro rata contribution to everyone in the world who owns Bitcoin. What a legend. Now, for those who just heard me, it's not he's going to just die and get rid of the MicroStrategy private keys, which hold at least like 700,000 Bitcoin, or I think they're maybe at the 800,000 mark now. They're coming close, but it's not that one. This is his own personal stash, which I think he owns like 12,000, maybe 17,000 worth of Bitcoin. But yeah, he's just saying like when he goes, those private keys will be destroyed. And again, that benefits the crypto, that benefits the Bitcoin network. It makes it even stronger because now you're taking away that supply out of the ecosystem because nobody has access to it anymore. So Saylor, what a legend for doing that. That's just his contribution for where he sees Bitcoin going in the future, and this is him adding to it. So is it humanitarian? What is he going to be known for? But he did announce this on Fox News. I think this was yesterday or this morning. So yeah, so that's what Michael Saylor plans to do with his Bitcoin, but not MicroStrategy's Bitcoin. Just keep that in mind. But all right, let's go into the news now. Let's talk about this IRS proposed mandating electronic delivery of tax forms for crypto. So if adopted, the proposal will take effect on January 1st of the calendar year following the publication of the final IRS rule. So if this does go through, it won't be for tax season of 2026. Now, the U.S. Internal Revenue Service is seeking to require electronic delivery of tax forms to crypto exchange users. Now, under the current rules, exchanges are required to provide paper copies of tax form 1099-DA, the IRS tax form used to document crypto transactions from a centralized exchange or broker. Now, if users request paper forms, the proposed new rules, slated to be published on Friday, remove this requirement and allow brokers to terminate the relationship with existing clients if they refuse the electronic delivery of tax forms. So additionally, if the IRS proposal would prohibit users from retroactively revoking consent for the electronic forms. So are they saying that like if you don't accept it, the exchange has a right to just shut down, but can they? Well, they could do that, but let's see. The IRS requires all broker dealers, platforms providing crypto services to users like exchanges to report user proceeds from each transaction and provide users with a Form 1099-DA detailing their transaction history for the tax season. However, exchanges are not required to track a cost basis for the 2025 tax year, tracking cost basis or the price paid for the investment purchase. This is the investor's responsibility, and the IRS has outlined that reporting requirements for brokers. So brokers are required to make these returns and must include identifying information of the customer, such as their customer's name, tax identification number, and then such other relevant information, including the gross proceeds from the transaction. Now, the exchanges they can easily give these guys the customer name, their tax information, whatnot, but as of right now, they have no responsibility for the gross proceeds from the transactions there, is what they're saying. So this is all responsible for the user, not them, but the IRS is, I think, trying to change that. Now, only 1 in 5 Americans right now, or about 55 million individuals, hold digital assets in the US, according to a National Cryptocurrency Association, a crypto advocacy group. Now, this is the top obstacles keeping people from acquiring or using crypto more. Let's see, there is lack of money to acquire crypto with. That's about 15% of people. Fear of crypto volatility is another 15%. Security concerns, 13%. Concerns about tax implications and reporting requirements is 10%. So that's stifling or stopping 10% of people of that 55 million. Lack of businesses who accept or use crypto. A lot of people are waiting on that. They want to see every single business accept crypto before they can get in or actually realize that it's real to them. And then lack of public understanding is 8%, which again, there is still a lot of people who don't know anything about crypto. They don't understand it. They don't know how easy it is to get it and actually even self-custody it. So these are a lot of concerns from keeping people from acquiring crypto. Now, tax compliance was one of the biggest impediments to adopting crypto, with 10% of the 54,000 respondents in the NCA survey citing digital assets on taxes as an issue. Now, more than 1/3 of respondents indicated that they wanted more education on the tax implications of digital assets, according to the NCA. So here's that survey they asked, which areas of the cryptocurrency knowledge do you feel you need more information about? So investment strategies for cryptocurrency is 47%, meaning people just want to know more on how do I invest my money and then make more of it. That's really what this one really shows. And then tax implications of investing in cryptocurrencies is 39%. I assume a lot of people in the crypto space do want like clearer tax rules because we never really had any. And it was basically if they caught you, you were in trouble. So definitely clearer rules would be nice. And then understanding blockchain technology is 38%. And again, before you even make any investment, you should understand what you're getting involved with. And yeah, people need to know about blockchain technology. It's just a decentralized distributed ledger, keeping track of records of whatever that cryptocurrency is. Bitcoin has their own blockchain. Ethereum has their own blockchain. It's just a digital record, a digital ledger of records. That's it. That's all the blockchain is, but it's decentralized. It's not centralized like the traditional system. So that's like where the understanding, I guess, people need to know of. And then security measures for protecting cryptocurrency investments is 38%. And again, protection-wise, self-custody wallet only. Don't leave it on your exchanges at all. Don't leave it on some central control in your wallet where you control the seed phrase. That's it. That's how you keep your assets safe. Now, risks and benefits of cryptocurrency investment is 37%. Again, always know your risk tolerance level out there. Only invest what you're willing to lose or can lose. So people do need to understand that as well. And then safeguarding against scams and mastering safe practices in cryptocurrency. Yeah, that you just got to experience. You got to visually see the scams take place. Hopefully it doesn't affect you. Hopefully you're one to be able to see the scams that happen, because every day I'm usually covering a crypto news scam article out there. Yesterday we had a lot. Poisoning scams, romance scams, pig butchering scams, wrench attack scams. There were so many out there taking place yesterday. So it's just you got to see what they look like, and then so that way you do not fall for those same scams. So yeah, that's another thing people need more awareness on. But concerns are resurfacing after Trump killed the controversial DeFi broker rule. So back in December of 2024, the IRS issued a rule classifying all front-end services, including decentralized exchanges and decentralized finance platforms, as broker-dealers, subjecting them to tax reporting requirements. Now, that was a funny one. So that was actually what was the concern about Trump killing that? It's like you can't go after the dexes. When you have your self-custody wallet, you have no idea who owns that wallet, who controls it. You just see that wallet's data and the transactions, but you don't know. So that where are the concerns coming from? So this meant that DeFi platforms would have to collect know your customer information and report proceeds from user sales to their IRS. Now, if they did do that, it's no longer DeFi anymore. It's now centralized finance. So US President Donald Trump signed a resolution in April of 2025 that killed the DeFi broker rule, which was well received by the crypto industry. However, crypto industry executives have sounded the alarm about ambiguous language in its stalled Clarity market structure bill that could force KYC reporting requirements on DeFi platforms and limit access in the nascent sector. So is that coming in there for the Clarity Act? I know there's I think I just saw that the Dems or the banks did not come with a compromise on the Clarity Act. So that's not going through as of yet because, yeah, both sides cannot make a deal. Banks do not want exchanges to be able to make money and give their clients earn more money. They want to be able to still keep in control on who gets yield on the stable coin. So they'll still offer their 0.01% or less and then probably offer 0% yield. That's what they want, but they don't want their clients to make any money. They want them to continue making it. So they're fighting it because they know they're going to lose the money if the Clarity Act passes and exchanges can start offering yield. And there's still so much more beyond that. But yeah, so the IRS is going back at the taxes. They are going to try to make that change. What was that change again? Where, I think the exchanges need to report on the gross income from every transaction of their users. So we'll see if that happens, but I doubt it. As of right now, the exchanges just need to report the tax ID and the user information. That's it. And it's always up to the user to report any taxable events that take place on their platform. So I'll keep you informed on what's going on here. Again, if it passes, it won't take place until next year. So that's the IRS tax news. Now let's move into some more, let's see, what's this article more compared to? It takes place in Canada, but looks like they're getting rid of their Bitcoin reserve proposal. So yeah, so not looking too good in Canada for Bitcoin anyways. So if anything, people who are into Bitcoin and crypto will just move away. That's all I get from this article. But Vancouver moves to close Bitcoin reserve proposal after a legal review. Over a year after Vancouver explored becoming a Bitcoin-friendly city, staff say municipal law bars holding Bitcoin in the city reserve. So they're saying, nope, can't do it. Now, Vancouver staff have recommended closing a council motion that explored whether the city could become Bitcoin-friendly, after determining that its rules don't allow the crypto to be held as municipal reserve asset. Now, the recommendation appears in a report to the council reviewing outstanding member motions, where staff said they had conclusively determined that Bitcoin is not an allowable investment asset, recommending the motion to be closed as part of a broader reprioritization of staff resources and efforts. Now, staff cited the Vancouver Charter, the provincial law that governs how the city operates, including how municipal funds can be invested, which does not permit the city to hold Bitcoin as a reserve asset, limiting Vancouver's ability to pursue the proposal. Now, the motion's sole opponent on council, Pete Fry, told local media that he assumed the proposal had already been shelved and was surprised to see it referenced in the report. I already thought it was dead in the water, he said. It was probably good closure to have it mentioned in here, but I don't even know that it was entirely necessary. Now, the recommendations comes more than a year after Vancouver Council initially backed a motion from Mayor Ken Sim, directing staff to study whether the city could become a Bitcoin-friendly city. Now, at the time, the proposal asked officials to examine accepting taxes and fees in crypto and the possibility of converting part of the city's financial reserves into Bitcoin. But the proposal had faced legal limits right off the start. Now, the British Columbia Ministry of Municipal Affairs said that at the time, the municipalities cannot hold financial reserves in crypto under provincial rules, adding in a statement that the intent of the legislation is that local government funds are not exposed to undue risk. Now, the legal and treasury-related barriers were reportedly already understood from the outside, so the decision to end the process does not come as a real surprise, said Kevin Lee, chief business officer of the crypto exchange Gate. Now, in Vancouver's case, the initial prospects appear to reflect Mayor Ken Sim's personal pro-Bitcoin vision as much as a practical municipal financial initiative, Lee added. Now, back then, Mayor Ken Sim defended the proposal, saying Bitcoin had been the top performing asset over the past 16 years, arguing it should at least be considered as part of a diversified portfolio. Now, Decrypt had tried to reach out to the mayor's office for a comment, and I guess we did get some. And so there have been some comment on constraints and upsides. So the outcome also reflects limitations on how municipalities operate financially. Demand for Bitcoin isn't the constraint public balance sheet, or isn't the public balance sheet mandates are. And Dominic John, analyst at quantitative research firm Zeus Research, told Decrypt that municipal treasuries are structured for capital preservation, which keeps asset like Bitcoin outside the reserve toolkit. He said that until legislation, accounting treatment, and custody frameworks evolve, cities like Vancouver will remain stuck at the study level. So when asked whether this could set a precedent for other cities, John said it's likely the same idea and would be explored elsewhere, though most proposals will die at feasibility. Now, this could happen only if local leaders believe there is political, branding, or ideological value in being seen as a pro-crypto or pro-innovation, Gately said. Now, that value, as in Vancouver's case, is not guaranteed. He said once the political upside is weak, most of these initiatives are likely to stall at the feasibility stage. And still, crypto remains used far more as an investment than for payments, Gately explained. So government payment options usually follow private sector behavior rather than lead it, he noted. So if crypto becomes widely used for everyday payments across retail, e-commerce, and services, then accepting it for taxes or municipal fees will be the natural extension to it. So until that happens, Vancouver is, dead in the water for this proposal. So basically anyone who comes up with another Bitcoin reserve proposal in Vancouver, it will just die out until those changes happen. So so no adoption news in Canada, just kicking the can down the road, waiting for things to change, and hopefully it comes back better. So that's what's going over in Vancouver. Now, let's see. Another lawsuit took place, and this is on our favorite penguin, Pudgy Penguins, accused of infringing on an original penguin trademark. Now, you're going to laugh when you see the final comparison, and you'll be like, Pudgy Penguins has this in the bag. It's like there is no similarities at all, other than it being a penguin. So let's go through this article on just like what they're being accused of and by who. So the company behind the clothing brand Original Penguin has accused Pudgy Penguins clothing merchandise of infringing on its trademark. So PEI Licensing, the firm behind the clothing brand Original Penguin, has filed a lawsuit against the non-fungible token project Pudgy Penguins, alleging trademark infringement, dilution, and unfair competition. The lawsuit was filed Wednesday in a Florida federal court, focuses on Pudgy Penguins apparel, alleging the company uses a family of penguin trademarks that are confusingly similar to PEI's marks. So remember that they think their trademark is confusingly similar, and you're not going to think it is. Now, this action results from defendants' unauthorized use and attempted registration of various penguin word and design trademarks in connection with apparel and related goods and services that are confusingly similar to the PEI's federally registered and famous penguin and penguin design trademark. Now, PEI said in its complaint that the immediate similarities between defendants' marks and products and PEI's penguin marks and products are shown in the example below, which compares PEI's and defendants' products side by side. So let's see, can we get a zoom in on this? Let's see, so we see a little penguin guy over there, some cursive language, and then here is Pudgy Penguin's design. Just some bold print, some Pudgy Penguin eyes, and I don't see a similarity in that one. So the PEI claimed in its lawsuit that it has used the penguin word mark at least as early as 1967. So I guess no one can use the word penguin now since that's trademarked, but at first used a penguin design on apparel as early as 1956. Now, the PEI licensing said that it sent a cease and desist to Pudgy Penguins in October of 2023, claiming its products infringe and dilute PEI's famous penguin marks. Now, the letter also demanded that Pudgy Penguins abandon applications with the U.S. Patent and Trademark Office to register various penguin marks, according to the lawsuit. Now, PEI claimed that Pudgy Penguins had misappropriated valuable property rights of the PEI, which was likely to cause confusion or mistake or to deceive members of the consuming public. Now, PEI asked the court to order the USPTO to reject Pudgy Penguin's application and stop the company from allegedly infringing on its trademark. Now, it also requested that Pudgy Penguins be ordered to destroy any product found likely to be confused with the PEI's trademark and be awarded all profits from the sales of such products. Now, Pudgy Penguin's legal chief, Jennifer McGlone, told Cointelegraph that the company was surprised by the action, particularly as both parties had been engaged in productive discussions to resolve this matter privately. Now, McClone said the company had advanced applications with the USPTO and was confident that PEI's claim lacked merit. The trademark in questions are visibly distinct and serve entirely different audiences and markets. Now, we have the utmost confidence that we will prevail, as Pudgy Penguins has already secured multiple trademark applications approved from the USPTO covering the Pudgy Penguins brand and related marks, she said. Meanwhile, Pudgy Penguins' X account posted a meme implying that its brand bears no similarities to the original Penguin. So yeah, here's Pudgy Penguin's post. So corporate needs you to find the differences between this picture and this picture. And then you got Pam down beneath going, they're the same picture. So yeah, right guys, is Pudgy Penguins infringing on this? Is there similarities? Yeah, I don't think so. So I think the suit's going to just end there. But that is funny that Pudgy Penguins like put this out as a total trolling event, but it's funny. I love it. So way to go, Pudgy Penguins. But yeah, I think they are going to win it. I don't think anybody is actually confused by PI. They were going to try to handle this privately, but now it's in public. So crypto community, have at it. PI is probably going to be very mad. So yeah, so that's Pudgy Penguin lawsuit. Like out of the negative news we had, Canada is no longer Bitcoin friendly just because they can't. IRS trying to go for more crypto taxation because users aren't reporting their taxes. So they want to make the exchanges report for them. So, yeah, and then Michael Saylor, interesting though, that's kind of good for news for Bitcoin in the future, because when Bitcoin's so scarce and Michael Saylor just wants to destroy his private keys so no one can get whatever he's holding. I think that's pretty cool. So it's kind of like a Satoshi Nakamoto event. So we'll have Satoshi's wallet never be touched again, and then Michael Saylor. I can't say MicroStrategy. This isn't MicroStrategy's wallet. It is Michael Saylor's wallet and not MicroStrategy. So just got to keep that in mind. But yeah, so that is it for the news today. Oh wait, one more little Twitter news. Just out of altcoin news out there, I guess Polkadot just got its first ETF. So yeah, the first ever spot Polkadot ETF goes live on the NASDAQ. 21 Shares has launched the first US spot Polkadot ETF trading under the ticker TDOT on the NASDAQ and seated with a 11 million and carrying a 0.3% fee. So all right, so new ETF hitting the market with another cryptocurrency. So, woo. But yeah, I just wanted to share that little last bit of news with you. It's altcoin, it's crypto news, it's Friday. We're having fun. It's the weekend coming up. And yeah, what's going to happen to the Bitcoin price? I think we're going to dip some more. I think our fear and greed index is going to dip too. So we had momentum. We were out of extreme fear. We were getting some good spikes going, but I felt that we were going to start going back down. So expect the fear and greed index to hit extreme fear again. And again, that's if Bitcoin continues to go down. If we are going to match the 200-week moving average, I'm still expecting 60,000. I know there's a lot of other people too, but then a lot of us out there think this could be the final, or not the final downward turn, but this month could be our final red month for Bitcoin's price. And then after that, we're hoping for another 5 months of green candles. And yep, so position yourself wisely, but again, we might experience some more dip. If things get crazy, I will do another show tomorrow since I'm here at the office anyways. But if everything's still the same, I'll see you guys on Monday. So everyone have a great weekend, and I'll see you guys soon.